Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a plug for a book called High Probable Japanese Candlestick Patterns. Before we get into that plug, we just want to give you our disclaimer real quick to remind you that this video is for illustrative and educational purposes only, although it is a promotion for our book. So before you do that also, we want you to subscribe to our YouTube channel, Forex Trading Unlocked, and now we will get into what the book is all about. High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. So let's get to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up, and if you go to our products, courses, and services tab, you can pull up the High Probable Japanese Candlestick Patterns page, and on that page we have a video that you can watch that will describe the different patterns and methodologies and things that you'll learn in the book. We also have a little copy of the book on the web page here for High Probable Japanese Candlestick Patterns, where you can either buy it or you can share it, but first you can preview it and check it out. And then at the bottom of the page you can also join our email list and subscribe to that if you would like, and you can also find access to other parts of our website from this page as well. So one of the reasons you want to read this book is so you can learn how to trade these signals. Now if you look at the US dollar Swiss chart from recently, we had a bullish engulfing line buy signal that had occurred here back on November 9th. We also have today a buy signal forming. The trading day is not over yet, but if this market settles where it's at or higher, that would complete either a piercing line or another bullish engulfing line buy signal. If you want to learn how to trade these buy and sell signals, then you go back, like I said, to our webpage and access High Probable Japanese Candlestick Patterns, preview it, and start learning on how you can actuate these actual trading signals. Now, ironically, Japanese candlestick patterns, which obviously come out of Japan, these methods have been used for over 400 years to trade the stock markets, forex markets, currency markets, option markets, you name it. Well, recently, when we had back in November, we had a bullish engulfing line buy signal here that had stamped a nice low on a daily basis. And now we have today, we have another high probable Japanese candlestick pattern forming, but we have to wait for the close and for follow through. Now, if you want to learn how to apply these trading signals to either your system or to use our methodology, you read the book High Probable Japanese Candlestick Patterns, and you'll be able to find out how to actuate these trades. Now, these signals, they occur often in many markets. They happen all the time. Just as you can see, just in the month alone of November, we had here in the US dollar yen trade, we already had a bullish engulfing line buy signal formed. We have another pattern forming here. We go back to the US dollar Swiss, and we have one forming again. And one of the nice things about knowing these signals, especially like on a day like today, when you have the US dollar Swiss and the US dollar Japanese yen forming signals at the same time, they're not always the same signal, like a bullish engulfing line or a piercing line or whatever, or maybe that's what you get. In one market you have a bullish engulfing line, another one you have a piercing line, but when these all line up, that gives you a good sentiment about where, especially like the dollar would be going, because all the currencies are based off of the dollar. When you have a signal, say in the US dollar Swiss, the US dollar JPY, and then also say in the Euro US dollar, if you all have buy and sell signals where for the dollar or against the dollar, and they all line up on the same date or around the same date, well, that's usually a good indication of where dollar strength or weakness is, and you can use that for options plays, for spreads, for futures, as well as the outright forex markets itself. These can also be used in stock markets and what have you as well, but especially in the currencies, they work fantastic because you don't necessarily have to be a yen trader or a Swiss trader or a pound trader or whatever you are. But if you are trading, let's say you're a Euro US dollar trader, and all of a sudden we have this US dollar buy signal for the Swiss, and you also have a sell signal in the pound, you have a buy signal in the US dollar yen, odds are that the Euro US dollar will be trading, in, at least in the short run, if there's a dollar buy signal or sell signal, that will follow through with that as well. So we'll have to learn more about that when you read the book. Or you can subscribe to our YouTube channel, Forex Trading Unlocked, because we have videos that post all kinds of analysis on the daily and weekly basis, and whenever we have trading signals from the high probable Japanese candlestick pattern book that evolve, we usually highlight them in a short-term video, which you can find by subscribing to our Forex Trading Unlocked YouTube channel, and we have all kinds of them on there. And also, once again, check out the book High Probable Japanese. Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here on February 1st through the 5th dollar index Forex market analysis. And before we get into that, we wanted to show you our disclaimer to remind you that this video is for illustrative and educational purposes only. Also, please subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. With that, let's get into what you are here for. So we have here we go. We have our forex-trading-unlocked.com website pulled up. And we already have the workstation page up, and we will toggle down to our chart of the dollar index. As you can see, in early January, the dollar index had a bullish engulfing line buy signal. That's something you can learn how to trade a signal like that in the book High Probable Japanese Candlestick Patterns. Since that low and that buy signal, the market, the index rather, has made higher move highs and higher move lows, which is indicative of a short-term bullish trend. Momentum is not very fierce. However, with higher move highs and higher move lows, we have to continue to believe that the short-term trend is in place. Right now, we are looking for a challenge of this 90-97 area here. A breakout following this arrow would push us up into this upside corrective target zone. The mere fact that if we take out this level, that would mean higher move highs after a higher move low, and stretching this, what I am saying right now, is only a correction. We are not bullish the US dollar overall, but there are some reasons why you would want to look to be more of a dollar bull in the short run over the next, like, say, probably 2 to 5 weeks. Most of it being what's going on with the pound and the euro, and even a little bit with the yen. So we know that we had the Fed meeting last week, and we know that the Fed has a lot of buying to do in the Treasury market. Well, the Bank of Japan confirmed once again last week that just like they've been doing for decades, they're going to be keeping on buying their Treasury bond market, and also keeping rates super low. Then we also have what's going on with the euro in the UK due to lockdown measures and other things that are fueling a high debt load that is just accelerating at a rampant rate, as well as the fact that there's other things that are making especially the EU very vulnerable as far as we're moving forward and through the first quarter of this 2021 year. The UK does have the one side that the pound has on it is the fact that oil is going up in price. As long as oil goes up, the pound may not sell off as much as the euro. However, the euro, we're looking to press that new lows, which would help to drive this dollar index up towards this 91.73 area. As far as an upside correction is concerned, I think you're going to get capped at most around this 92.36 area. Should we reach that area, I think you're going to see a consolidation. Like I said, I'm not overly bullish the dollar, and that would put us into a good area for us to end this correction if that is all it is. So should this current bullish short-term trend be just a correction in the medium term and longer term, then this would be an area where I think you're going to find the dollar index to struggle. You'll probably see a bouncing euro at that point, and also a rallying pound. That's if that occurs. We also have an interest rate equation that's going on right now, key off of the 30-year Treasury bond futures. If you see them sustaining a trade above $170, that would probably keep the dollar from really pressing on to higher move highs, meaning that would help to keep this capped in this upside correction target zone. Should you see a big slide in the 30-year Treasury notes, because we do have divergence between the short-term and the long-term rates, and the reason I'm saying this is because remember that interest rates are a function of currency pricing, so that will impact the dollar index especially over the next couple months. as those spreads widen, if they do. So like I said, if you see the treasury bonds going lower, meaning higher in rates in the market rate, that will probably give a lift to the dollar and also put pressure on the pound, the euro, and the yen and some other major currencies, at least in the short run. And that would give us help to fulfill this little theory that we're going to press this correction up to this higher zone. Should we poke into this area, then I would expect to see a lot of volatility and chopping around. This will probably be your range, this 90 cents, basically 90.03 up to 92.36. I see the dollar index getting really choppy over the next couple months in this area. So that's what we have to look forward to over the week ahead. Like I said, be very cautious and watch this 90.97. If you're a dollar bear right now and the dollar index breaches this and starts making new highs, I would use a lot of caution. So we're going to do individual videos on all the different currency crosses for the week ahead. So we're going to stop this stream, and then we will be coming up with another one in a little bit. But also just want to remind you once again to subscribe to our YouTube channel, Forex Trading Unlocked, and read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And that way you can learn how to manage these signals in the market as they occur. And I want to say thank you once again. I'm Teddy Keckstedt from Forex Trading Unlocked. You have a great week in the trading week ahead. And remember to always have a plan and